What I want to do right now is discuss 7 different ETFs that give a monthly dividend that you can marry options with to have a super conservative kind of monthly income strategy.
Did your coins?
So when I say conservative, I mean that when you buy a stock and you're going to keep it into perpetuity, to just say you're going to do that, right? You're not going to look at it. You're you're doing the ultimate buy and hold type of strategy. You buy something that you like, let's say an ETF that has very little chance of going out of business. So you buy it and you forget about it, but it pays you a dividend each month. Just kind of think of this as the premise, right? You're buying something that pays you a dividend each month. Well, what can be more passive than that, right? What can be more passive than that? Think about that. You hear all these different type of, you know, side hustle jobs that make passive income and so forth. What can be more passive than buying something, doing nothing with it, and then collecting a dividend monthly? Mm. That's pretty passive. It's not too many things that can be more passive than that. But what if you can marry options to that to enhance that monthly dividend? And enhance that monthly dividend. Maybe even if the ETF has a some weekly options, actually getting some type of income from it, not only on a monthly basis from the dividend, but potentially on a weekly basis from using options with that type of conservative process. So you have you have stocks, regardless of what stock it is, it has the potential to go out of business, right? But some are close to 0% over the time frame you're going to be doing this. Let's say, 5, 10 years or whatever the case may be.
This is Sky Tattoo and Happy Kitty.
Or you can have, you can trade in an ETF though that it has even less of a chance potentially going out of business of most companies, and you don't have to deal with the earnings type of releases every quarter, right? That could make the stock, have these big gyrations. Mm. So putting together some ETFs is similar to what we talk about of using like the SPY, that's an ETF obviously, or using the stock indexes, the ES, the SPX, to kind of reduce some of the volatility. So now you do that with some ETFs that's paying a monthly dividend. You can set up a really nice monthly type of income process. Okay? So let's look at that. I'm gonna look at 7 different stocks. So the first one here is this. This is called the Vesco S&P 500 High Dividend Low Volatility ETF, okay, this here, and you can see that the year-to-date performance it's been nice. Okay? The 1-year performance is been not so nice, right? But for the most part, flat, right? It's been flat, which is good for your for that this type of strategy, right? But regardless, as long as this thing is not going to go out of business, you can get a monthly dividend from it. That's the 1 year. This is the 5 year chart for this performance. So that's been great, right? You not only get the monthly dividend, but you have got some appreciation out of this ETF. That's the holy grail there, getting dividends plus you're getting appreciation. So if we go over here and let's just say we want to get into this initially on this one, okay? If you're not in it already, it has some options that you can see. You got 9 days, 37, 128, and so forth. It's not a lot. It doesn't have weeklies, so that means the options are not robust, but they're going to be perfectly fine for what we're trying to do. And so in this case, if you wanted to do the 4 different strategies that we talk about, okay, we're going to look at the 4 different strategies. The first strategy is what you hear with the will strategy a lot, and that's the selling of the naked put. So if you sold this naked put, you can potentially collect 62 cents, and your cost basis will be around the 43.38. If it goes If it goes down and expires below the 44 strike, then you would have to take ownership, and you don't start losing until it drops below this 44, this 43.38. Right? But you have a 72% chance of potentially not having to or making some money on this. You might have to take ownership, but you have within the next 37 days a 72% chance of making some monies on this trade. But if you have to take ownership of it, you're perfectly fine with that, because that's the strategy you're trying to do, right? Long term, trying to collect a certain amount of premium every month, right? A certain amount of premium, not only from the options, but from the dividend if you're holding the shares. But this is how you can initiate the shares in this one. Then if we go back really quickly and we look at the dividend on this one is paying a dividend of 386, as you can see here, and that is done monthly, right? So, and that dividend is about just under 14 cents, or just over 14 cents at this point. Okay. All right. So that's one. If we jump back over here and we look at another one, this is the Invesco preferred ETF, and this one has done well so far year to date, but the 1 year has been a little down, as you can see, about 10%, and then the 5 year has also been down about 13%. So you would have lost some appreciation on this one over the last 5 years, your principal. But using options to kind of marry with this type of strategy could have helped lessen that or made this process positive. So let's look at this really quickly, and let's go over here. Look at the dividend. This could have erased the down part for you dividend wise. It's up. You have a dividend right now of 584, just under 6%, and then you have the monthly dividend. Once again, this is paid out monthly. It's not a big amount, but it's still, it's an absolute dollar rise. It's not a big amount, but it's still almost 6% on the year, for based on what this stock is trading at this point. And if we're going to kind of marry some options against it, we could once again go over here. Instead of doing a naked put, because you can see this 37 days out, it's not a lot of premium in these puts, right? It's not a lot of premium in these puts. So in this case, you can jump in and you can do something like you can buy a covered call, right? So we go down here and we look for the covered stock there, and then this. If you wanted to go to up to $13, then you can give yourself an opportunity to make up to that, right? Or you can change that and say, okay, I'm going to put this at 14. It's not going to be, it's not a high odds it's going to get to the 14. As you can see, this one is more of, okay, I'm going to marry the options or this type of strategy with it, but I'm really trying to, get that dividend each month, that kind of payout, and stay in a range over a period of time, because this is something I'm going to constantly do over and over again. All right, so the first one was a little better than this one. If we jump back over to the next one here and look at this one here, this is DIV. This is the Global X Super Dividend US ETF, and you can see that the 1 year has been, or the year to date has been nice. The 1 year has been a little down, and the 5 year has been down about 20%. So that's going to lose a lot of your principal with that dropping. Don't have to worry about this going to zero, but that's a big drop over the last 5 years. But let's look at the dividend here. You can see that this dividend is pretty high right now. It's just under 7% at 6.81%. And that is about just under 11 cents a month that they're paying you this dividend here. So that's not bad. And if we go over here and let's look at a strategy here. So far we talked about doing the naked put with 37 days. This one doesn't have great options as well, but they do have them nonetheless. And you can see that in this one here, these options are really poor. It's no activity on the selling part, right? So on this call side, if we wanted to sell a covered call, you can, it's no one bid. Maybe you can get a market maker to go in the mid of here, but that's not a lot of confidence, right? That you can sell the calls here. So this one right here is it's one that if you're okay with taking ownership and just getting that dividend, that's fine. But I wouldn't do this one. Okay, I wouldn't marry the options with this one at this point. And then if we jump back over here and go to the next one here. So this is once again a Global X Super Dividend REIT ETF, and so you can see year to date this was not bad, and 1 year this is dropped about 12%, and then the 5 year this has been brutal, right? So this is dropped about 44% in the last 5 years. So this is another one that you don't want that type of fall, but it's been, you can understand what happened in 2020. You can see that it fell most of that in there, but it's barely come off that since then, right? So that was a big drop, but you can argue that won't happen going forward. Let's say if you look at the 1 year, once again, that was 12% down. That's better than what the market has done, the S&P 500. So you can consider that, right? That's been better in the last year than what the S&P 500 has executed. And sometime, we don't know what happened during some of these, during 2020, a lot of these REITs probably stopped paying their dividend or whatever the case may be. But if we go and look at this here really quickly, you can see that once again, these options don't have any weeklies, but they do have a bid at the 24. So if you wanted to jump in here and do a collar on this strategy, and we've talked about the collars before, and you can go into the Dorian Way school to be able to kind of get an understanding of what the collar is, but it's just a cover call, and you take some of the monies to buy the put to cover yourself. So in this scenario, I don't like this because it's not giving this put is no action over here, so it's causing this to be too much money, and you're only getting about, if you can you're getting about $32, and the most you can make is 65 cents or $65 on this. But if you had 100 shares, that's still pretty good, right? To make $65 off something like this at this price in a short period of time. So this is not bad either. If you think about percentage wise, that would be pretty nice. All right, so let's go KBW high dividend yield financial kind of ETF. And you can see year to date, this is good. Everything has been going up so far for all these things. 1 year, this has been down about 15%. And then 5 years, this is down about 22.8%. And you can see a lot of this happened during the 2020, but it's basically been going up since then, right? So kind of keep in mind vehicle for the last 3 years. And so then if we jump over here and just take a look at this really quickly, let's take a look at the dividend here, and you can see that this dividend is really nice, right? Just under 10% and 9.96%, and that's done monthly, right? So you're getting a little over 14 cents a month on this, and it's only trading for $17. So this can work for small account and so forth as well. So if we go out here and we look at the options, all of these options so far have been poor. I'm going to leave the best one for last, but you have this 37 days we've been doing. I don't like these, but you can still try to do a collar or a cover call, get filled at the price that you're looking for. Okay? All right, so jumping back over here, let's jump back and let's look at this one here. This is the Global X NASDAQ 100 covered call ETF. This is a ETF that sells covered calls, right? That's one of the strategies that we've been talking about, right? So far we talked about the naked put, we talked about the covered call, and we talked about the collar. Well, this ETF sells covered calls on NASDAQ 100 stocks. And so for this year, it's obviously done well. It's up 7%. The last 1 year, it was brutal. NASDAQ was down 35%. The NASDAQ 100. This is how covered calls can protect you and lessen your downside. The NASDAQ 100 was down 35% last year, you guys. This was only down 18 in almost 18.5%. Yeah, it's still down, but that's significantly less than the Nasdaq 100, which is it's doing these covered calls in the last 5 years. You guys can see that this one has actually been down 28% the last 5 years. That's not great, because the Nasdaq has been really awesome the last 5 years. So we have to figure out why that's been the case. But if we go and look at this dividend is almost 12%, as you can see, 11.98%, and that's almost 17 cents every month, which is really, really nice. Okay? So this is one you can do that on. These options are a little bit better than the ones we've just looked at, and so in this scenario, you can look to do a bionic bull. We haven't talked about that yet, but we can. The bionic bull is, once again, if you're okay with taking ownership of shares or something, you can do a bionic bull by selling the put and buying a call. And so if we bought this call here, this is going to be a small debit. I would structure this to be a credit, but then if you had to take ownership of the shares, then you can sell some longer term calls on it. It doesn't have to be 37 days. Going over to this last one, and this last one is the best one, everyone. This is a JP Morgan Equity Premium Income ETF. You can see year to date it's up a little bit, and then 1 year out it was down 10%. The market was down. The S&P was down about 20%. Nasdaq was down about 35%. The last 5 years, you can see that it's done well. Something is going to pay out so much a dividend, right? So if we go over here, you can see that this one has a over 12.5% dividend or yield on the year, right? And then the amount they pay out monthly is about just over 57 cents. Right? And once again, that's monthly, and the stock is not that expensive. So, and you can do a better job on this one of selling covered calls against it. So let me just show you what I mean. If we go here, and if you own the shares already, you can, if you did the covered call, you can do that. You can do it here, and this will give you the opportunity to gain another $150 if it jumps up to this 56. If it doesn't, then someone's paying you $11. That's not great, but it's not bad, right? Because you've already receiving what we just talked about. That's $11 on there, and then if you go back over to the Thinkorswim here, that's $11 on top of the $57 that you're going to get monthly. Okay, so you just increase that to $68 that you're receiving on your monies each month if you can do that on around a 30-day basis. All right, so these are the ETFs I wanted to talk about that you can consider with them to get a monthly kind of conservative strategy going, trying to marry options against it. You want to look around for ETFs that you like that has an option base a little better than some of these that we demonstrated, so that you can not only get a really good dividend, but also get use your options to increase that dividend. But it's harder on ETFs that's going to pay you a monthly dividend, right? That's the whole kind of lure to these. The kind of pitch for them is, okay, you're gonna be able to count on some consistent income if that's what you're looking for on a monthly basis to supplement your income. But if you can, when you can, marry options against them, or at least get into these with options, and if you can sell the cover call, great, and then get back in it with an option, then this can really enhance your monthly dividend or your monthly income in a conservative way. Because if you had to hold this, then that's fine, you can hold it. Okay? All right, so any questions?